Every trader learns the 50% fib retracement. Smart money ignores it. The level institutions actually fill entries at is deeper, in a zone between 62 and 79%, with one specific level inside that zone that prints over and over. ICT calls it optimal trade entry, or OTE, and 70.5% is the sweet spot. Today, why the deeper retracement works, how to draw OTE on any leg, and how to stack it with order blocks or fair value gaps for A+ entries. Here is the framework. Take the move you want to join, the impulse leg up or the impulse leg down. Draw your fib from the start of the leg to its peak. The OTE zone is between 62 and 79% retracement of that leg. Inside that band, the 70.5% level is the magnet. The level smart money seems to fill entries at consistently. The retracement is deep because the algorithm wants to clear out weak-handed longs before continuation. Buyers who entered at 50% are already underwater by the time price reaches OTE. They panic out and provide the liquidity for the institutional fill. Watch how it plays out. The leg rallies from 100 to 122. You're looking for an entry to join the next leg up. Don't buy the breakout, that's chasing. Don't buy the 50% retrace either, that's premature. Wait for price to retrace into the OTE zone between roughly 105.50 and 108.40. Inside that zone, especially near 106.50, the 70.5 level, that's where smart money fills the long. Place your stop just below the leg low, and your target is a new high or the next major draw on liquidity above. Here's where OTE gets really sharp. Inside the OTE zone, look for confluence with other ICT tools. Is there an order block, the last down candle before the impulse, sitting inside the OTE band? Is there an unfilled fair value gap inside the zone? When the 70.5 level coincides with an order block, an FVG, or ideally both, you've got three independent reasons for smart money to fill the trade right there. That triple confluence is what separates an A+ OTE entry from a B-grade one, and the win rate gap between them is enormous. Now the trap. OTE only works when you're joining a trend that's actually intact. If price retraces into the OTE zone, but the higher time frame trend has already flipped, lower highs, lower lows, market structure broken, that retracement isn't a setup. It's a counter-trend trade you're dressing up with a fib level. The discipline is to confirm structure first, draw OTE second. The order matters. Trend, then setup, then entry, never the other way around. On any NQ swing, draw the fib from the leg low to the leg high. Mark the 62 and 79 bands and the 70.5 level inside. Then look for an order block or an FVG that sits inside that band. The setups that worked almost always show price ticking right into the OTE zone, sometimes wicking exactly to 70.5, then reversing back in the direction of the original leg. Build that habit on past trades, and the OTE entry becomes a reflex on the next one. So, optimal trade entry is the 62 to 79% retracement of the leg you want to join, with 70.5% as the magnet. Stack OTE with an order block or fair value gap for A+ entries, and only take it when the higher time frame structure is intact. Forget the 50% retracement, that's where the crowd buys. OTE is where the algorithm fills. Subscribe for the full method and trade your own plan. Education, not financial advice.